Welcome back. We're back with Kevin Hebner, Managing Director, Global Investment Strategist at TD Epoch. And Kevin, okay, you set up for us. There's basically two sides or two parts to this argument: strength of China and basically the politicization of the U.S. dollar. Let's stick with China right now. We talked about this network effect, and in your report, you talk about the path to strength of helping create that is actually having a currency that helps. Becomes common with invoicing and settlement and those types of things. So maybe just kind of talk about that environment that has to be present to allow that to happen.
Yeah, there's a natural or sort of logical sequence on how a currency starts to get used beyond its borders. And this is really the sequence that the United States followed, say, just over 100 years ago, and the UK did, say, 220 years ago or so. But initially, you start with invoicing. So if you're exporting from China electronics or whatever they're exporting, instead of having it invoiced and settled in dollars, you'd have it settled in Renminbi. And we've seen that share that's settled in Renminbi go up from roughly 0% a decade ago to about 30% now. So that is something they are doing. And China's having a lot of discussions with countries, not just Russia. Russia clearly is being forced to do this, but also India, Iran, Argentina, Brazil, South Africa, well, the BRIC countries plus a few others. Turkey would be in that group. So more and more countries for more and more goods are interested in invoicing what they import from China and then settling in renminbi rather than euros or US dollars. And
people might look at 30% and think that's not, quite the number one, but it is the second most used currency, is it not?
Yeah, for invoicing for trade, it's now number two to the US dollar and above the euro. And certainly the slope is increasing.
What about emerging markets? Because this is an interesting piece you highlight as well, too, where,
yes.
I've done my fair share of traveling, too, and you notice sometimes when, there are no strings attached when it comes for financing or helping emerging markets. Well, tell us what's happening.
So certainly China, when they're looking for their allies, and there are a lot of people who are sympathetic to China and also are suspicious of the US dollar. So whether it's Belt and Road lending, or it can be central bank swaps that China set up. And they've now set up about 39 central bank swap lines, and they've actually used about 17 of those. They're becoming more involved as a lender of last resort to countries that get in trouble. And these are often countries that receive a lot of Chinese FDI, they do trade, they've been recipients of Belt and Road money and so forth. And that's beginning to be a long list and includes different countries in Asia, Africa, and quite a few countries in South America as well, so different EMs. And that is the process in which the renminbi is becoming used more, and China's financial infrastructure, monetary infrastructure is spreading out. And countries want to have an alternative to the US dollar system because, to some extent, because they fear sanctions, but also they're concerned about the, I think, the oversized role of the US dollar in their economic activities.
And then when you layer on top of that, China, recognizing some of the growing strength, as any country would do, putting in some new systems in place to help with this. And we've heard a lot more about SWIFT. I think a lot of people weren't familiar with SWIFT before what happened with Russia. We all became familiar very quickly. And there's something called chips.
Yes. Yeah. And so when we're talking about, the US dollar, and de-dollarizing, it's not really about the US dollar per se, it's about the US dollar financial system. And part of the US dollar financial system is SWIFT, which is a messaging system. So it'll tell one bank where the money's supposed to go. CHIPS is the clearinghouse interbank payment system. So it actually is a hub and spoke system like our airline system is to send money from one bank, typically a US bank, a correspondent bank to another bank, either in the United States or globally. But there's lots of other parts of the US dollar financial system. There's the regulatory structure with the Fed and the Treasury. There's the onshore and offshore markets, bonds, equities, private equity. So it's quite big. And so China knows that they need to build these So they have, for example, created CIPS. So it's the China interbank payment system. So it's modeled on chips, and that's getting used increasingly. It still relies on SWIFT for messaging, but more and more countries and more banks are using their financial transactions through the Chinese system rather than the US-based chip system.
It's a fascinating depth in terms of understanding how this network effect comes together. All right, stay with us when we come back. We're going to get into the last part of the conversation. This is what China is doing to strengthen the renminbi. At the same time, there's concerns about the US dollar and the politicization. We'll talk about what's happening with that. You're watching Money Talk. We'll be right back.